Good morning, everyone. You're all very welcome to Friday's market recap. Again, another hugely volatile week, albeit not too much on the data front. This week, a lot of it has just been just sentiment. Sentiment analysis has been a massive thing this week in the markets. We've seen the indices grind lower. We had kind of a consolidation Monday, Tuesday, Wednesday. Wednesday into Thursday, we've seen that fairly consistent sell-off. But we have seen a little bit of recovery into the close, and it'll be interesting to see whether that is maintained. Now, quickly, if we just look at the data, kind of just to run through the data that's gone by for the week ahead, or the week gone by, Chinese inflation was slightly higher. US inflation, again, slightly higher. It was much stronger than what people were expecting, and the markets didn't take too kindly on that Wednesday evening into Thursday. Thursday's figures, again, with the UK GDP marked lower. And of course, as a result, all of the UK figures yesterday were weaker, broadly speaking. Now, that does put the question on the cards of, is the UK now on the brink of recession? And looking at some of this economic data, you'd be deduced to say that a recession is probably on the cards now over the next few months, maybe next 3 to 6 months. Worth keeping an eye on that, but definitely seeing bearish sentiment in the overall economy playing out in the UK. Thursday, again, we had our weekly jobless claims yesterday. Not massively enthusiastic about those, kind of come in on expectations, so we didn't see that much of a move on the data front. And of course, today, to round out the week, we have, again, a number of speakers. We had RBA Bullock overnight. In Australia, we had the Gundas this morning in the ECB, and we've got Schnabel this evening. Now, we do have the Michigan Consumer Sentiment Index out today at 3 o'clock, so it'll be worth keeping an eye on that into the week. I'm expecting probably a softer close into the week. Broadly speaking, if we look at any of these indices kind of over the last few days or so, we've seen how, for example, here, if we look at the Dow Jones Industrial Average, we can see how the price action through the latter part of the month of April when consolidated. Then we obviously sold off into the FOMC after the FOMC kind of Thursday last week, and we've still continued to kind of gradually grind lower. Now, we are seeing a consolidation. As I said initially, the first part of this week, we did see the price action grind lower. We have seen a brief pop. So all eyes really to see, how does the price action close this week? Do we close stronger back into this 32,750, 33,000 level up here, eclipsing some of the consolidation levels from the beginning of the week? Or do we see a potential fade off again? At this point in time, when we look at smart money, when we look at the kind of the price action as it develops, we have this negative flag developing. We have that fairly straight, then we consolidated into this kind of negative flag structure. We consolidated again. We broke into another negative flag down here. But we have seen a brief pop. So I suppose if you were looking at smart money, the negative flag structure, you'd be looking for a price action bounce probably from this region to catapult back into the 32.75, 32.800 level. But again, we're seeing near-term highs at this 32,000 level. So at the moment, price action is holding underneath this 32,000 handle. Nice psychological round number with triple zeros in play. Of course, if we look at the S&Ps, again, a very, very similar scenario. On the 1 hour previous consolidation, that broke down very, very quickly through 41.50, through the lows of 4100, and we continue to slide all the way back into this just above the 38.50 handle. Now, of course, similar to the Dow Jones, we have seen that break of this short-term structure, and the price action is also topping out underneath the 4,000 level. So what you may see happening now is a potential influx to the downside to clean up this initial break of this negative flag structure into this region down here, and look for a possible bounce. It may happen, it may not. Just worth keeping an eye on all the options, both the buy side and the sell side. At this moment in time, I very much favor selling in the rallies and selling the pullbacks, the lower highs for the next phase lower, than trying to catch a falling knife. That's just my own personal viewpoint. And of course, you only have to go out to the daily timeframes to see what is actually taking place at this moment in time. And of course, you can see the lower lows, lower highs, lower lows is playing out beautifully. And of course, even if you adopt the Fibonacci's from the retail trading space, we can see very, very clearly that the price action has bounced off the 276. So we closed right at the 276 last night. We are seeing a little bit of a bounce. If that plays out to be correct, moving the fibs down, moving this fib down here, it might be a chance now to see a little bit of a retracement back into this region for the next phase of selling. Now, broadly speaking, on the higher time frames, when we look at kind of the post-COVID recovery. This region down here between kind of 3,200 and 3,500 is my medium to longer term benchmark on the S&P. This is where I'm looking for the price action to come back into. This was our pre-COVID highs. This was our COVID sell-off. The price action went on this massive parabolic rally, approximately 120% growth. And now we're starting to see that unwind. So it now becomes a case of waiting for those rallies, looking to sell those dips and looking for more downside pressures in the indices. And last, of course, on the indices is the Nasdaq. Nasdaq, the most heavily affected of the three. We can see that again playing out. It broke out through this 13,000 handle, 13,900, 13,000 level. It has cleared that pretty comfortably. The price action is again, like the other two, has flagged lower into the consolidation at the beginning of this week, had sold off on Wednesday off the back of those CPI figures. And we're seeing the price action bounce as a result. Okay. So indirectly, we are trading underneath this 12,200 level. And we are seeing the price action grind higher into the weekly close. But of course, this could very easily reject. We could very easily see the price action fold back into these as lows again. So the risks at the moment is very much to the downside. As we speak at the moment on gold, we're seeing very, very structural price action. So this is where we were last week. We talked about this level up here at 1900. It did reject to the T. I've actually marked out some levels. So these become lower highs now. But actually what we're seeing on gold, we're seeing a fairly steadily decline into this level. We did mention last week, once this 1850 handle gives way, the price action looks in a lot of trouble. And of course, that's exactly what happened. We broke through the 1850. We came back up to test. We didn't quite get to this 1860 handle that I was looking for, but we did reject around this 1850 level. The price action is sold off. And at this period in time, there's not really much more left to stop gold from maybe making a run next week into these regions down here. I have a region here between 1785, 1795 would be the opportune level. We've got a daily candle here, which I'd love to see mitigated. Love to see all this price action from the bullish drive get cleaned up to get the price action balanced. And of course, when we look at it on the 4 hour as well, we can see that we do have some 4 hour structures down here at the 785 level. So at the moment, we're seeing that lower low, lower high scenario. The price action is playing out very, very cleanly at the moment. Now, of course, if you want to look at the DXY, the big talking point this week, particularly on Wednesday, was that DXY, we broke through that 104 handle. The dollar, euro dollar broke into 103 territory. The cable broke sub 122. Dollar CAD, Aussie dollar, Kiwi dollar, all continued to move the other way off the back of this dollar strength. We've broken through the 104 handle. We've topped out initially around 105. We're still seeing the price action create these dips. So personally speaking, it would be nice to see the price action put back into kind of clean up this bullish price action on the DXY. But of course, let's wait and see, because the price action could very easily take out these nearer term highs and continue progressing to the upside. So that pretty much rounds out our week. We will be back on Monday for another preview for the next week. But until then, have a great weekend.